Welcome back. You're tuned in to Bazaar Morning Call. You're on CNBC-TV18. Well, let's get chatting about a couple of stocks that we just discussed in our top 10 segment. Let's analyze some of those numbers. Deven Choksey, our director of KRChoksey, joins us on the show. Hi, Deven. Good morning. Thanks so much for joining in. Well, give us a couple of details in terms of the numbers that we got overnight. And let's start off with the Nifty component. That's Coal India. Numbers look quite good. Valuation-wise, it has some comfort. What's your view on the stock? Because e-auction prices have cooled off, but volume growth is looking very, very good.
Yeah, good morning, Nigel. I think this is probably one of the best times that the Coal India is enjoying. Given the kind of revamping of the operations that the government has done in form of extracting the coal out of the mines and giving it, I think, just in time to the power industry is something which I think this company has remarkably achieved. So we were hoping for higher amount of volume growth, and which got confirmed yesterday when the results came out. Even though I think there is good possibility that e-auction would end up fetching better yield, I think in selective quarters, I think you might see some amount of disappointment on that particular front, but that doesn't take away the larger picture for the company as a whole. In my viewpoint, I think given the strength of the mindset they have, given the strength of logistic distribution that they have created, and given the kind of possibility that we are enjoying today in form of higher amount of efficiency in providing coal, I think this company would steadily continue to perform better on a quarter-on-quarter basis. Maybe the numbers will keep changing. And as you rightly observed, I think the valuation-wise, this particular company has been giving extraordinarily good amount of comfort because initially the investors have remained reluctant in putting money into the fossil fuel related businesses, and that's where Coal India was probably victimized. But as the realization keeps coming in about, I think, requirement of coal for the generation of power, and I think also the maturity coming in form of decarbonization, I think that part is basically allowing the investors now to once again allot money into such businesses. And I believe that Coal India holds potential for attracting larger amount of money. So obviously, on one side, operations have been regenerated, and on the other side, you are having the possibility of higher amount of money coming in the business from the investors. Both this part, and at the same time, the valuation is not so expensive. So these are some of the points which are making this particular company available currently for adding into the portfolio.
Deven, morning. What about IdeaForge? It was the blockbuster listing, issue price 672. Straight away doubled on opening day, listed at 1,300. Now it's down to 1,000 and I think 75, 76. Numbers are weak. Margins have fallen from 55% down to 29%. Profits consequently are down 54%. And plus there was those news reports about how India has barred makers of military drones from using Chinese parts. I'm not sure if IdeaForge gets impacted, but how would you put all these, news flow together and, suggest what to do with the stock from here on?
Good morning, Rima. Well, I think this is something which is not very surprising to me, particularly. The day on which the company got listed, I think this was a view which was very clearly put across that the valuation-wise, you can't be pricing the company so expensive. And if you would price the company expensive on the listing day on the market, then possibly I think the investors will not be able to make money, and that exactly is playing out. I'm not per se against the business and the possibility and the potential that this business is offering, but I have a strong understanding on this particular subject that any business, I think, which is connected with railways or the defense for that matter, I would think that the margins are going to be operating very, very, very tight. And that is where probably I think the companies will have to demonstrate extraordinary amount of skills in beating those margin pressures. In many cases, I think that is not their reality. And we are yet to study, I think, many number of quarters for IdeaForge. I think this is still a recent listing. But I believe that I think, including in many other companies which are in the listed space, I feel that I think if the companies run up ahead of its profit performance, they would probably, I think, find disappointment on the pricing performance as far as the market is concerned. So in my viewpoint, I think one will have to wait before one would act into this particular counter to add into the portfolio. Certainly, they will have to demonstrate the ability to provide the sustainable performance. Then I would think that I think it would be easy for investors to walk into it. Particularly, current valuation still remains even after the price drop current valuation still remains far more expensive, and would probably, I think, keep myself out of it for the time being, till the time I see the profit sustaining possibilities happening in the counter.
It's Deven. Good morning. Pharma's had a fantastic earnings season, right? All the big companies, and right now we're speaking to a mid-sized one. Most of the companies are sounding optimistic. Cipla, who knows, there might be some sort of a corporate development. How would you look at the pharma rally, and within this space, what do you like?
Good morning, Survi. Well, I think important point, the raw material prices have remained under control, and which has allowed most of the pharma companies who have reported the results have been in a position to improve upon the margin that they have up till now produced. In earlier quarters, I think the significant amount of challenge remained with the input costs, and as a result of which I think most of them have suffered. Second important point to talk about, and where the companies have scored, they have successfully, I think, entered into some of the territories, the markets, where probably I think they were non-existent, and they have made the market share out of it. Prior to that, I think they were having a challenge on that front. Companies like Cipla, companies like Sun Pharma, who have been reporting higher growth, they have actually been able to produce so largely because of their focus on complex generics. And that's where probably I think these companies have been able to report relatively higher amount of volume and the business growth in respective segment, therapeutic segment categories as well. In my viewpoint, I think the companies have been now coming off the whatever earlier challenges, including the US FDA related challenges, and now ready to show relatively better performances. Maybe I think we continue to like some of the larger ones, including the Sun Pharma, including Cipla. In our portfolio, we continue to hold them. Not too sure immediately, I think, whether any other mid-sized companies immediately appeal us, I think, from the investment perspective. Maybe when we'll have to take a little deep dive into the subject of, I think, how the growth is panning out in those companies. But our clarity remains with Sun Pharma, Cipla, and Dr. Reddy kind of companies far more, and we are far more comfortable there.
Deven, thank you very much for joining us this morning. Today, there's also news in Lupin where its arm has gotten approval for an eczema oil. The market size is $10 million.